Hi and welcome everyone to Steve Wheeler and welcome to our channel. Alright, so we're going to talk a little bit about the overall futures markets, how they got started, some basics about futures pricing, a couple of ways you can profit from the futures trading, essentially some basic tools that you're going to need, and the most popular financial futures markets here in the US. Alright, so the futures markets were originally designed with the idea of protecting people from future price volatility, and they really started out in the 1700s in Japan, actually trading the rice futures. So essentially a person entering into a futures contract was trying to hedge against future price volatility. So a buyer would like to be able to make sure that they can buy something at a future date at a given price. Same thing with a seller. If you were a seller of a certain, let's say, agricultural commodity, corn, etc., you'd like to make sure you can lock in that price at some future date. So all futures contracts are what's known as standardized. So standardization spells out all the specifics about that futures contract and how it is settled. So essentially, futures contracts are either cash settled or physically settled. Originally, futures contracts were physically settled. So essentially, if you locked in that price, you could actually take physical possession of a given commodity in the future at a certain price. Same thing as a seller. You could sell that item or that commodity at a future date at a given price. For whatever you're considering trading, if you'd like to drill down on in terms of more specifics on these contract specifications, just Google that particular contract. You can read more about it specifically, but we'll cover a lot of the basics here today, which will help you to get started. All right, so the futures contracts we're going to be talking about today are actually all electronically traded, but most of them by the Chicago Mercantile Exchange, the CME Group, which is here in the United States, which is the largest futures exchange in the US. All right, so we're going to cover the financial futures such as the ES, which is the S&P Futures E-mini contract, and some other contracts as well. So all futures are actually priced at a given level at any one time, and you'll enter the trade at the current price and exit, of course, at whatever price it's at when you exit the trade. We'll talk a little bit more specifically about that here in just a second. All right, so with futures trading, there's several ways you can profit, which is really one of the benefits. Shorting or going short. Essentially, you're selling your contract first and buying it back later. So that's a little bit foreign to some people because you're selling something that you don't already own and buying it back later. So essentially with a futures contract, if you take a short position, you're selling first at a given price, and if you buy it back at a lower price, you'll actually profit on the difference. If you sell it and buy it back at a higher price, you're going to lose on that position. All right, so long positions meaning you're buying the contract first and selling it later at hopefully a higher price. If you do that, you make a profit. If you buy at a given price, sell later at a lower price, you will lose on that position. All right, so with futures trading, there's some certain tools I would strongly recommend that everyone have. Charting is just going to give you a graphical view of the recent price history on that particular contract. So here you can see this is a chart example of the S&P futures where it had moved up. So you can see in this particular case, if you bought at a lower price, sold at a higher price, you would profit on that position. So charting is essential. So this is an example of a chart on the S&P futures. Also with trading futures, you need a trading platform. Okay, so a trading platform is going to give you a tool to be able to enter your orders and manage that trade. So you can see in this particular example, this is the NinjaTrader Chart Trader interface. On the screen, you can see I've got the buy and sell buttons. On the screen, I could choose whatever instrument I want to trade, the time and force for my orders, whatever account I want to trade, and order quantity. So also on a platform such as NinjaTrader, you have the ability to trade in simulation mode, which is something I would strongly recommend to everyone when you first start out in simulation mode. Similar to if you were learning to fly an airplane. Okay, so a lot of people learn to fly airplanes in a simulator for two reasons. One, it's a lot cheaper to learn that way and a lot safer. Same thing is true of trading. With simulation, you're not taking any risk while you're learning, and you'll also learn how to use the trading platform that you're using. It's important to know all the right buttons to push, of course. All right, so here in the United States, the most common financial futures markets are listed here. The S&P futures, along with the symbol. Each one of these futures contracts has a symbol. All right, so the symbol for the S&P futures contract is the ES. Symbol for the NASDAQ is the NQ. Symbol for the Dow is the YM. And the symbol for the Russell is the RTY. All right, so also for these markets, there's also what's known as a micro futures market. And this has been around for several years now. And especially if you're new to trading or trading a smaller account, I do strongly recommend start out with these micro futures contracts. You're taking on less risk. And also, I think you'll find them much easier to trade from a psychological standpoint because you're not going to be as nervous about your trading. Symbol for the S&P is the MES, NASDAQ MNQ. Symbol for the Dow is MYM, and the symbol for the Russell is M2K. All right, so these futures contracts all have a specific price where you'll enter. That's your current price at any one time. And of course, these prices are going to move when the market is open. All right, so in this particular example, this is known as a price ladder, but you can see that for each movement on this ladder is a quarter of a point. Each one of those, for this specific contract, the ES, which is the S&P futures, again, the E-mini, each minimum movement is a quarter of a point, or 0.25 points. And that is known as a tick. So a tick on any futures contract is really the minimum movement for that contract. Now these tick values have a specific dollar value associated with that movement as well. All right, so on the ES contract, for example, a quarter point move has a $12.50 dollar value. All right, so $12.50 dollar value. So for example, let's just take an example here. If you bought the S&P futures contract at 3832.75 and it moves up 1 point, which is 3833.75, that would be a 1 point move. So if you bought at 3832.75, sold later at 3833.75, you would profit by four times $12.50, or $50, less whatever commissions you would have paid on that trade. All right, so again, each futures contract has its own specifications, so make sure that before you start trading live in any of these markets that you know the how they trade, the minimum movement, and how that minimum movement will affect you financially. All right, so this is a brief video of the futures market actually trading, and you can see on the left side of the screen you've actually got the number of contracts that are willing to buy at those prices and the number of contracts on the right side that are willing to sell at those prices. So that's the actual S&P futures trade. Now here's an example again of a video where we put in a limit order. That's on the left side of the screen. You can see that blue line, a limit order to buy that contract, which we just got filled on a long position. Now this actual contract is the MES contract. This is the micro futures contract. Now the micro futures contract, for each tick, it's a $1.25 move. So you can see you're taking on less risk with this contract. And in this example, we bought at 3805.25, and down on the bottom of the screen you can see our current profit and loss on this particular trade. And there's also a red line that you may have seen earlier. That's the stop loss. That's to protect you from any significant losses on the trade. The blue line on the upper right is the limit order to sell, which means if we get out at that price, we will profit. So we'll just kind of watch this for a second here. So again, if we move up to that blue line and we get filled on that order, okay, so we just got filled, so we made a small profit on that long position. So that just gives you a brief example of how the futures markets trade, or this particular contract trades, entering a long order, putting in a limit order to take profits, and we got filled on the position. All right, so as I said before, these contracts all have a symbol, they'll have a tick size, and they have a dollar value per tick. So this is an example on the S&P futures, the ES contract. The tick size is a quarter of a point, or 0.25. The tick value, this is in US dollars, is $12.50 for the ES contract. Now for the Dow futures, the symbol's the YM. The minimum movement is 1 point, and the value per tick is $5. On the Russell, the symbol's RTY. Tick size is 1/10 of a point, and for each tenth of a point, it's a $5 value per tick. NASDAQ, minimum movement is a quarter point, and the value per tick is $5. All right, so again, here's an example of where we put in a long trade. That's the limit order on the left side of the screen. You can see the red line is actually your stop loss. That means if you come down to that level, it's going to take you out of the trade. In this case, you'd be taken out with a small loss. And we'll just watch this trade for a second. Again, on the bottom of the screen, you can see the actual profit and loss. This is per contract. In this example, we're long one contract. So you can see the number 1 with the green area. That just means we're long one contract. We put in a limit order to take profits. Of course, on a long position, you need to buy low and sell high. Short positions, you need to sell high and buy back lower. All right, so here again, we've got that limit order at 38.07, and we'll see if we get filled. Okay, so we came up, got filled. All right, so if you're enjoying this content and valuing from it, please don't forget to click on the like button and also subscribe to our channel, and we'll notify you of further upcoming sessions. This was part 1. Will be upcoming sessions of this same series, and thanks for watching our channel. I'll put a link in the description area below where you can sign up to be notified of our free training sessions. Thanks again for watching our channel.